Okay, welcome back to our channel, MegaWhale team. Thanks for tuning into today's video. We're going to go through a Bitcoin chart today, talk about what's happening on the chart, give you our opinion on where we think the price is headed, and talk a little bit about the DXY and some other coins, and really dive right into the nitty-gritty about this recent move, because Bitcoin has been moving sideways for the last couple of days over here. And if we take a look through some of these charts, we can really see the extent of this sideways move. You know, it's been about a week now. It's just been pushing sideways. So let's dive right in. Bitcoin, you know, on this chart over here, we can see we do have this uptrending support line, and this uptrending support line has held for quite some time now on the daily. We've held it ever since, you know, all the way down over here in May, rebounding in October, and finally losing it after a failed retest, failed support in May. So we're pushing below it now. We told you in our previous video that if we're able to get above that $32,000 range, we will see a push upwards. And the push upward would result in a move to around 36K. And obviously that downward move is around 24. We're going to go ahead and confirm that, because we do have a small time frame here. We can go to the 4-hour chart on the current Bitcoin chart, and we have this pennant formation. Now we do know we have two types of pennants, and pennants are short-term symmetrical triangles. We have a pennant, I'm going to go ahead and draw it out, which we have on the left over here, which is where the price enters from the downside. And then we have a pennant where the price can enter from the bottom side. All right, so the top side, sorry, and the downside. Yes, they are the same. They are neutral patterns. The consolidation is the same. We need 5 retests, 2, 3, 1, 2. All right, or you could count this one as another one and cross this one out. All right, so 5 retests at least, all right, minimum, and the price will generally continue in the direction in which it comes from. All right, so that is kind of how we use a pennant formation in trading. So taking a look at the current formation, we have to assume that this is in fact a bearish pennant. All right, bearish pennants price enter from the top side down. Therefore, we can go ahead and apply a measured move. We can copy and paste that measured move over. And where does it target us? It targets us around 24K, because we take it from the breakout, remember? So we assume the breakout will be anywhere from here upwards. So we go ahead and take this one over here, for example, copy and paste it, and apply it to a breakout up over here. We can see our target range is around this to here. So we do have this range of around 24K to 24.6K. And we do have to keep in mind that we have a major support zone right over here, which is this downtrending support line. So between this area, we have this major area of support. We could definitely find a bounce here at 26K, push upwards and continue, or we could come all the way down to 24K before moving upwards. Just taking a look at my other charts over here. Cool, so we can go ahead and chuck on the Brave New Coin Liquid Index next. And I wanted to talk about, because we just talked about the implications of this short-term pattern, and how this short-term pattern could lead to a continuation downwards to 24K. So we'll go ahead and bring this chart up here. And obviously we talked about this chart last time, but if you're new here and you're just tuning in, I'm gonna go ahead and quickly explain it again, and then we'll talk about what it actually means. So this is basically the long-term time frame for Bitcoin. We have the time frame consisting from around, you know, the 13th, 2013, leading all the way up to the current date, so about 9 years in this ascending channel. We can see that we have a few ranges over here. This top range, so the distance between these two lines here, is essentially our full-blown bull market, where we have our blow-off tops, and we also have our confirmation of rejections. We can see the blow-off tops are depicted by these gray boxes. All right, so these are our blow-off tops. And then we have our bear market initiation, or what I like to say, the bull market rejection, which is where we see the bear market starting, where we have this retrace back below this first line. We generally find support on the Gaussian channel. It's generally find support on or in the Gaussian channel, push upwards, reject from that range, all right, push upwards, reject, and then come down into our bear market. And the bear market, as you can see, always results in the price reaching either the dotted line, which we see over here, or the solid baseline at the bottom. All right, so we have two bottoms, and we go ahead and indicate our solid line and our dotted line as bottom number 1 and bottom number 2. We can also see that every time the price enters the Gaussian channel, we go ahead and follow through it. So we see over here, we enter, we follow through, we enter, we follow through, and then again we enter and we follow through. So this is what we're saying over here, fallen through GW, which is Gaussian channel, to retest dotted line. Awesome. All right, so moving forward on the chart, we can see with Bitcoin in its short-term pennant formation that a potential drop to 24K is likely. And 24K is sitting just underneath. If we go ahead and look at this, it is sitting just underneath this dotted line. What happens when we lose a dotted line? Well, every single time we've lost this dotted line, we see a pretty significant drop. And it always results in a retest of the solid line. All right, so we go ahead. Every single time we lose a dotted line, we eventually retest the solid line before we start moving into an uptrend again. All right, and obviously we had this breakout up here, but we always come down before we start moving into an uptrend again. So I'm waiting for that retest of that bottom solid line. If we do break that 24K level, I think if we do break downwards here, and this pattern is in fact validated, and we lose this solid trend line over here, and we head to 24K, I think it would be safe to assume that Bitcoin is actually going to continue lower into this gray box here, and we have that target of around $20,000 to $18,000. All right. Moving upwards on the bullish case scenario, the solid green line is our bull market or our GW midline bull market trigger. You may be thinking, what the hell is that, MegaWhale? What are you talking about? Well, we've talked about this a fair bit, and we'll go ahead and just zoom out to the daily chart here, because when I talk about this now, you'll kind of understand a little bit more what that is. And we've talked a lot about that 200-day moving average, which is here, and we've talked a lot about this resistance range here, and we've talked about how we need to actually break upwards here and clear this major resistance zone at 35K, clear the 100-day moving average, and clear the 200-day moving average for us to become bullish again, all right? And for us to become macro bullish, we need to clear this top here. So the price needs to get above this range here before we can become macro bullish. Now, where is that GW midline sitting? It is sitting around 45,400. 45,400 is this major resistance zone. All right, the 44,500 and $44,444 range, which is this range here, is a very significant resistance. As you can see, we found resistance on this zone multiple attempts, finding support one time before dropping down again. If we go back in history, we can find resistance, support. We lost it, we got fully rejected, and again support. This is a very strong zone. If we flip this zone, we will push upwards and continue upwards into a bull market. Now, I wouldn't say we're going to go into a full-blown bull market rally like we see in these occasions. We do actually need the Bitcoin price to break upwards past this midline. We can see here midline, and I'll go up again and show you, for us to go into this full-blown bull market. And that is when altcoins really start to pick off, because after that initial drop down, which we see here, and we see here, this is only after that point altcoins start to rally. All right, so altcoins get the most of their gains when Bitcoin's in this below off top region of the log scale, okay? Bitcoin dominance is looking okay. It's pushing 45%. Of course, we talked a lot about Bitcoin dominance. If it continues upwards, altcoins will suffer. DXY, we talked about this last video, and we said that we printed a spinning top candle, which is a bearish reversal pattern, considering the price has moved upwards first. So if we print a spinning top candle at the top of a rally, it signifies a bearish reversal, and if we print it at the bottom of a valley or a drop, it signifies a bullish reversal. In this case, it signified a bearish reversal pattern, and we expect this to come down. And if that comes down, we can actually see some relief in the global financial markets. And of course, Bitcoin being a risk asset, if it finds a relief with the global financial markets, it could see a rally upwards here. And I've said already that although this is a bearish pattern, it is always a chance that it breaks upwards, because at the end of the day, it is in fact a neutral pattern with a higher degree of a bearish breakdown due to what has happened predating the pattern. All right, that's how we determine direction. All right, this is a bearish direction, the bearish continuation. The overall trend is downwards. Therefore, the overall trend we expect to continue downwards, unless proven otherwise. Now, what proves us otherwise? Well, let's go back to the 12-hour chart. And we talked about this a lot in the previous video. For us to be bullish on the short term, we need to break above this major resistance zone. If that happens, we will flip this trend and we will push upwards to $35,000 to $36,000 range. It is as simple as that. When this occurs, when we break upwards out of this downwards sloping pennant, or should I say downward sloping resistance line of the pennant, and we clear this range, clearing this top here, I would be looking to enter some altcoins. I'd be looking to trade a little bit. That is when I would be a little bit more bullish on the shorter term. But we talked all about our long-term price predictions and our long-term validations already. So let's see if there's anything else I want to talk about today. And this chart is an interesting one. Real quickly before we finish up, this is an interesting chart over here. And we've talked a lot about descending wedges on this channel before. So if you haven't stuck around and listened to this, what this actually in fact is we've just taken the normal Bitcoin chart, we've chucked it on a log scale, and then we've gone ahead and inverted it. And you may be thinking, Mega, you can't do that to do a technical analysis, that's ridiculous. But if you watch any of my previous videos, I actually really like using inverted log scales or just inverted charts in general, because it gives you a more unbiased view on what the market is doing, what it's looking like, and you can really analyze the market from a objective standpoint. Because sometimes just by the way the market looks or the price looks, that can I would say cultivate or create directional biases that you would latch onto. If the price looks like it's heading an uptrend, you'd be thinking, wow, you know, this looks bullish. I'm gonna be bullish here, even without looking at the data. But if we take a look at this chart here, what we can see is we can see a major zone broken. All right, and this is our major $32,000 support. We've broken above that neckline. We kind of have this pattern over here, this almost, I would say, almost very close to Adam and Eve pattern, where we have this sharp V-shaped valley. All right, followed by this rounded semicircular bottom, and we do have these peaks on the bottom. But as long as the price returns to the baseline of this circle, it is valid. So just going off that alone, where would that send us? And I'm not going to go ahead and say this is where we think it's going, because I don't think this is happening. But like I said, this could send us down to around 18,000. And where's that on the chart? Well, it's over here. It's a low range, right? Anywhere between what the baseline from current date 16,000 all the way up to 18,500, top range 20. All right, so where does that send us? 18,000, a little bit lower than 18,000. We do have major support here. We can assume that maybe 18,000. So the chart is looking undoubtedly bearish, but we already know, guys, that there's a lot more to crypto nowadays, and a lot more to price action than just how the chart is looking. And although the chart can be used to predict price trends at a high degree of accuracy, like if anything, I've proven to you guys in the last few months how effective technical analysis actually is. We've predicted this entire move downwards utilizing nothing but technical analysis, but just considering, keeping in mind the fundamentals. I just canceled one of my tabs, that sucks. The fundamental concepts behind the economic situation, economic environment, and we talked a lot about that. But we can see over here that the DXY is dropping. And if the DXY drops, it means money shifting out of dollars, out of cash, into assets. And it'd be interesting to see if some of that money flows into Bitcoin here. Especially if we get a pretty significant drop down over here, we could see that money flow into Bitcoin and therefore see a little bit of a rally in the crypto market. And I've talked a little bit about, in my previous video, I talked a little bit how there is a potential that we do see a bullish June over here, which we can see by this illustration over here. See a potential bullish June push upwards into this resistance zone before we finally get rejected again when the interest rates rise again in July. In June, in mid-June, sending that market into a little bit of blow off top and then push back down into that 24K region. Now again, $32,000 being that trigger. All right. If you have any questions so far, leave them in the comments below. I'm going to go ahead and introduce Bitget Exchange real quickly. I wanted to quickly introduce my new favorite exchange, Bitget. Bitget is a non-KYC exchange, which is particularly beneficial for members in the UK and Australia who are limited by certain trade restrictions. Bitget has 250 plus spot trading pairs, as well as 60 plus leverage trading pairs, up to 125x leverage. Sign up now in the link in the description using our referral code to get up to $153 in rewards for completing 4 separate tasks. Let's go ahead and dive back into the video. Okay, so we're going to go ahead and get back into a technical analysis now, and do want to point out one thing before we go ahead and do that, is we do have an inverted hammer candle on the weekly. Now, this is one thing that I am leaning towards a more bullish reversal, because a inverted hammer is a bullish candlestick. It signifies a point of indecision in the market, and generally when it's found after aggressive downward price action, it can signify that bears are losing strength to the bulls. and it can signify a reversal is incoming. The question is, will that reversal result in anything significant, or will it just result in a small move upwards? And that's kind of where we look at that bullish pennant or that bearish pennant, and we say, you know, if we can't get over this range here, we're not expecting anything more than a drop downwards back to 24k. But if we can clear this range and we can get over this range and break out of over here, we can expect a move back up to 35, 36, and that could result in a continuation and a full-blown reversal in the trend. So I really stress you guys not to sit here and think, oh, MegaWhale's bearish right now, MegaWhale's bullish right now. The reality is according to technical indicators, which we'll go through in a second, they are bearish. According to market structure analysis, which I've shown you today in today's video, if we go ahead and take a look at this chart, sorry, not that chart, this chart over here, we see that we are actually leaning to more towards the bullish side just because we are coming down to a major support. So we are pretty much on the fence here, guys. We have information kind of confirming the bullish and the bearish narrative, and I've talked a lot about that in my previous videos. So I'm not going to go ahead and stick to an argument. I'm very much waiting. I'm no longer predicting what's happening. I'm sitting here just analyzing what's happening, to explain to you guys what is actually occurring, but more or less just waiting for a decision, and I'll act based on decision. I don't act in neutral patterns. This is a neutral pattern. I don't act in neutral patterns. We haven't had a neutral pattern for a long time. This entire way down, guys, we had a bearish ascending channel. Hence why I was so confident that the price is going to drop. This entire way down, we had breakdowns of major support lines. We can draw them in over here. We have 50 SMA loss. Very confident the price is going to break down, all right? But right now we have a neutral pattern. The first neutral pattern we printed on the daily chart for quite some time. I think being overly bearish here could blind you towards the upside potential, and I think being overly bearish over here bullish over here could blind you to the downside potential. And thus, I'm just remaining calm, collected, and I'm just waiting for the price to develop, and then I will be acting. And I highly suggest that all you take away from these videos right now is that we have potential for both up or down, and then what you really need to take away is the triggers. So what prices that need to break for those levels to play out. So don't just sit here and be like, oh, you know, all Mega's saying is we can go up or down. That's not true. I'm telling you that we can go up or down, but I'm showing you the direction we can take. I'm showing you the levels that we break, which will result in those moves. And I'm showing you how to act when those moves occur. So big difference. So let's go ahead and dive into the technical analysis. We're going to go to, we'll do it on this chart over here. Let's go to the 1 day chart. All right. We'll start on the 1 day chart, and we'll go ahead and start with our Gaussian channel. And we can see the price is quite extended from the Gaussian channel. Last time we saw the price quite extended was around this range and this range. And usually when we are very extended from the Gaussian channel, it can signify, you know, we're coming to a point of reversal, or the trend can't continue like this for much longer. And that is a very true statement. The trend can't continue like this for much longer. On the 1 day, the Gaussian channel is signifying that, you know, we're coming close to a point where we need to either reverse or we need to have another explosive move downwards, because we can't continue slowly moving like this on a sideways action. If we go ahead and take a look at the 3 day chart, we can see a similarity on the Gaussian channel over here. And I do want to point out one thing. If we go ahead and invert the chart, there is no difference to us being below it, like this, compared to us being above it. All right, what it means that when the price re-enters the Gaussian channel, regardless of it enters from the top or downside, it will generally continue through the Gaussian channel. And that is held consistent on the larger time frames for the entirety of Bitcoin's lifespan. And that is one of the indicators I'll be utilizing when I'm trying to predict when is the best time to be looking to buy Bitcoin, or when is the best time to be looking to get back into cryptocurrency heavily. And that is basically when this Gaussian channel, we re-enter the Gaussian channel. And looking at the weekly chart, we are underneath the weekly Gaussian channel for the first time in nearly 4 years. I think, yeah, nearly 4 years, 3 and a bit years. And, you know, last time we were under the Gaussian channel, we spent a total amount of, let's take a look. We spent, besides our first and last candle, we spent 120 days below it. So let's go ahead and just take a look. Besides our first and last candle, 120 days below it will bring us to September. So I'm not saying that's going to happen, but it's an interesting bit of data to think about, guys. All right, Let's go back to the daily chart and take a look at our Ichimoku cloud. And our Ichimoku cloud is printing a weak buy signal, but we kind of closed below it. So it did print a weak buy signal. We do have the lagging span finding a lot of support over here, which is representing as this neutral sideways pattern. And the price hasn't quite broken over that conversion line. We do have resistance from the clouds, of course, and the baseline. On the 3-day chart, we don't really see much anything else is kind of representing exactly the same thing. We go to a smaller time frame, like a 12-hour chart. We can see again, the price is quite indecisive right now. It's breaking over conversion, dropping below conversion. All it's telling us is we're in a sideways consolidation pattern, and you shouldn't be jumping a gun right yet. Let's go back to the 3-day chart and bring up the RSI. Okay, so what we see on the RSI is something, I guess, pretty good. I would like to say that we did break above that 30 point on RSI again, signifying a weak buy signal. And of course, we already know when we're under 30, we're in oversold territory, but when we break back above 30, it indicates a weak buy signal or a strong buy signal depending on the time frame and what else is happening on the charts. Since we don't have a lot of supporting data, we can't say this is in fact a strong buy signal. We can draw this downward trending line, and we don't have that breakout yet. And I would really like to just drill one point in, guys, is for us to get breakouts of patterns which are sustained, we also need momentum. We also need momentum, all right? We take a look at this pattern over here, and this is a prime example, all right? We can go ahead and draw this downward sloping resistance on the RSI. And yes, it didn't represent what we saw on the chart. The chart price pattern was very different, but a lot of people get mixed up. The RSI is not showing us what the price is doing. It's showing us what the momentum is doing. Momentum is velocity and speed of which price moves, all right? Keep that in mind within a specific period, all right? Ignore the 9 moving average, ignore this yellow line, the 14, sorry, just keep an eye on this downward trending line. So we have resistance along this downward trending line. At the point of resistance was right over here. Point of resistance right over here. Point of resistance right over here. Again, right over here. And again, finally right over here. This entire way, the RSI had this resistance that we saw on this chart. And if I go ahead and look at this again, we can kind of see this inverted cup and handle almost. And when we broke out of this resistance on the RSI, that is actually when we printed that buy signal, because that is when the price continued upwards with momentum. And a lot of people say, well, didn't the RSI move upwards because the price moved upwards? It's kind of the other way around. They kind of work in conjunction. When the RSI breaks massive areas of diagonal horizontal momentum resistance, it signifies a shift in market momentum, and that shift, or that positive shift in momentum, can result in the price moving up more easily and breaking through these resistances. And that is what we've seen. So when we go ahead and look at the current price action, and we see this neutral pattern, which is neither bullish or bearish, but it is a downward sloping neutral pattern in the sense that the price entered downwards. We do want to wait to see if the price can actually break out of this downward sloping RSI. If that happens and we break out of this pattern and clear 32, I think there's no doubt in my mind that potentially we've seen a bottom for at least a little bit until we reach this level here. If we climb up here, maybe we could see some more stuff going on, maybe some more reversals, maybe some more critical zones broken. But I think up until that point, I think there's no doubt really that that would be a pretty significant reversal. There'll be a pretty significant reversal. And I think anyone who says that isn't a significant reversal is just looking, with those goggles on, not really looking at the market for what it is. And I'm always going to tell you guys the objective truth. Always come here with the objective analysis. Never going to sugarcoat it. Just going to tell you the hard facts. The facts are that the market structure is looking undoubtedly more bullish in terms of historical price action. I keep losing my charts. In comparison, so I keep losing my charts. In comparison to, where is it? There it is. In comparison to the technicals, and the technicals are suggesting that we are in a sideways consolidation on the short term. Macro, we are down. Market structure analysis suggesting that we've reached major critical support, which we've held 2 of the 3 times, and we can push upwards from here. All right, so a lot of mixed signals, and when that happens, there's no point gambling. The best way is to stay neutral and wait, because at the end of the day, guys, as a technical analyst, as a market technician, I take data, I apply data, I interpret that data, and then I base my decisions on that data. And it's all probability at the end of the day. I use technical indicators to guide my decision making. When there's a favorable amount of bullish technical indicators or data I can derive from technical indicators that suggest that the price is going to continue upwards, I'll be looking for entries. When it's the other way, I look for exits. And when it's neutral, I wait. And this is the period where you should be waiting. I've already told you, our lower target is 24K. If it reaches 24K, awesome, it reached 24K. It already reached 24K once. If it reaches again, awesome, good job, all right? And if it goes upwards here, we know when we should be entering. We know what we should be looking for. Entering right now with aggressive purchasing strategies would be a very foolish move in my opinion, okay? That sums up the video today, guys. I hope you enjoyed. If you have any questions, leave them down in the comments below. I do not have a community question for today's video. I've just come over a little bit of a cold. I'm feeling quite sick. I'm quite cold, so I've got a hoodie on. But I hope to see you in the next video. And if you have a question for the next video, leave them in the comments below. I make sure I always choose at least one question to answer at the end of every video. All right. Thanks for watching, team. I'll see you in the next one.